Hey, what's up, guys? Marshall Sparkman here. I wanted to do a quick video and explain the closing costs associated with any loan. The loan that I'm going to show you, what I'm going to do is I'm going to show you an actual itemized fee worksheet that a lender will kick out usually when we send you a quote. This way you know exactly what's going on, all the fees to expect, understanding what all the fees are. I'm going to take my time and go through this. Hopefully you get a lot out of it. So I'm going to hop over here. This is an itemized fee worksheet that we'll send out. So it's got the bank that provided it. You'll have your property's address. You'll have your name on there, your loan number, whatever interest rate we're quoting. So this was one that I was quoting today. It was a VA loan for $325,000. So just know your closing costs are going to, most of the fees are fixed. There are some that will adjust depending on the sales price, such as, I'll talk about that in a second actually. So the first thing you need to understand, the line 800, all the stuff in this first box, these are called lender fees or bank fees. This is how the bank makes their money. So for VA loans, we don't charge any lender fees at all. So this is zero and blank all the way through. Most companies will charge a processing fee and an underwriting fee. Most banks are anywhere between $1,000 to $1,500 between those two fees. You will find that our closing costs are typically about $1,000 to $1,500 less than our nearest competitor, just because we don't charge any of those types of fees. So moving on to the other fees on here, a lot of times you'll see a loan origination fee depending on how the lender is compensated. Our typically we're compensated through the interest rate. How that works, I'm going to talk about this because it's always the big elephant in the room nobody wants to talk about, but I'm just trying to be transparent. How how do mortgage companies get paid off your loan? So for example, if it's a $300,000 loan and your interest rate is, let's just say it's 3%. So that bank is going to make 3% $9,000 per year. National average is you're going to hold your house for at least 5 years. So that's $45,000 worth of interest that the banks are pretty much guaranteed they're going to make. It's a safe bet when a bank does a loan that they're going to make at least $45,000 in interest over the next 5 years. That's not including any of the other fees or anything else that's built in. That's just the income that's generated. So when your loan is sold, you've got this note, a promissory note, basically that's a secure. I'm just using this piece of paper. This is not an actual note. You've got this piece of paper that we can take and sell to the highest bidder on the secondary market. That's worth about $45,000 worth of banking on it. So then when we go to sell the loan, that's when the bank makes their money, is because whatever company is going to service this loan knows they've got $45,000 right there. So they typically will give the bank back anywhere between 2.5% to 3% of your loan amount. So then us as loan officers, I'm paid 100% commission. I don't make any money out of charging you any additional fees. Let me be clear about that. My income comes from the bank paying me based on the revenue that they know that they're going to generate once we close this loan. So that's where my compensation comes from. All right. So enough of that. Back to back to the closing cost here. So appraisal. The appraisal is rolled into the closing cost. Most appraisals. This was a VA loan. They're $485 for conventional loans. Those appraisals go usually about 5.25 in this area. If it's a unique property like a big farm or a lake house, it's going to be more, or an investment property, the appraisers cost more. Credit reports, we charge $48 for credit reports. That's paid to DataFax as a third-party company that we use. Oh, by the way, all these fees are the bank fees. Every other fee on here, they're all third-party fees that you're going to pay no matter which lender you go to. They are all going to have about the same third-party fees, okay? The only fees excuse me, the only fees that will vary between different lenders is going to be this 800 box, which is the loan, your loan fees or bank fees. Okay. So anyways, back to, we're going to pay a credit report fee. We're going to do a tax service fee that goes to the third party company that pulls your tax transcripts from the IRS if needed. Sometimes we don't even charge this on conventional loans and other stuff. Moving on, you have your owner's title insurance and lender's title insurance policy. I don't want to get too much into what is lender's insurance because there are some great videos, and I can send you a PDF that explains what you need to know about title insurance. But just know if you're getting a loan, a mortgage loan, you're going to be required to obtain at least lender's title insurance. What that is that's basically an in title insurance policy that protects the lender if somebody were to ever come back in the future and lay claims to that property. An example would be, let's say you're buying a new construction house and the builder, let's say the roofer came back and said, that builder never paid me, I'm going to put a lien on your house. Well, the title insurance protects you from anybody being able to come back and state claims to your property. Or another example could be you bought a house from somebody and then they pass away and then their heirs come back and they say, hey, this was supposed to be my property. It was in my parents' will, and they want to come back and sue you for the property that you just bought. Well, title insurance protects you. That's what an owner's insurance policy does, is it basically says the title insurance company is going to go to bat for you and they're going to put their attorneys on the case. Title insurance is super cheap for the owner's title insurance. It's not required to get a mortgage. However, the lender's policy is a requirement. The owner's policy is not a requirement. In fact, you get to elect whether if you want it or not, but it's typically so cheap, I just say it's worth having. Don't worry about it. Your sellers are probably paying your closing costs for you anyways. Okay, next thing is a closing protection letter that's paid. Here we got Solomon Parks Title and Escrow, whatever title company it is. Most of them charge about $50 for a closing protection letter. And that basically, that's the attorney's stamp and seal saying that I back what we're closing here. We back everything that we're doing. And it's a protection letter that goes to the lender. Next thing is most attorneys charge about $495 to do a title examination fee. So title examination, most attorneys will pay a third-party company to do a title search. What they do is they run to the county, either it's electronic records or if they physically have to go to the county, pull the title for your property and make sure there's no liens or judgments or anything outstanding or any encumbrances to your title work. So most attorneys charge about $495 for that or so. That's what this attorney charges. So let's talk about these attorney fees real quick. We use a third-party service. It's called Smart Fees. So basically we go in and we pull fees from, if the title company has their fees posted online, we can pull their fees automatically without having to go to the title companies and wait a day or two for them to get back to us. We can pull fees automated online pretty fast. So anytime I'm quoting you title insurance fees, this is backed by this third-party company that whatever title company we choose, they'll stand behind and honor. So it's not like they're going to come back and say, well, I know your quote said 1,800, but we actually charge 2,000. Whatever we give you here, we're going to be able to close with that specific title insurance company. Let's talk about that real quick. If I'm quoting you one title insurance company and then your real estate agent uses a different title insurance company that I couldn't get fees for automated and their fees come back different, well, that's on you. So you have the right to choose. Let me be crystal clear. Realtors will pick whatever title company they have a relationship with to close the transaction, but you as the buyer have the right to choose whatever title insurance company you want to. So if you have a relationship with an attorney or you want to use somebody that the lenders use on a regular basis that we're comfortable with because we have more interaction with them and we know who's good and who's not good, let us know and we'll stand behind whatever quotes we pull for those guys. But if you want to elect to use a different title company based on your real estate agent's recommendation and their fees are higher than what I have quoting you, that's going to be on you. Okay, just know that. Okay, recording fees. So all the 1,100 fees are going to the title company. All the 1,200 fees right here, these are all going to the county. So you're going to pay the county $179 here locally. Most counties charge about $179 to record all the paperwork and all the documentation after the deal closes. So when the deal closes, all this is recorded at the courthouse and the courthouse charges us. Tennessee also charges what's called Tennessee state tax stamps. Now, Tennessee does not charge you income tax. However, they do tax about everything else you could possibly imagine. One of them is when you go to buy a house, they have a tax stamp. So Tennessee charges, just like when you go to get your motor vehicle and you pay taxes on your vehicle, your drive tax or whatever they call them every year that you have to pay. This is the same thing. When you go to buy a house, you got to pay a little tax. And then they also have another state tax stamp to file the warranty deed, to file the paperwork with the county as well. So they have a filing fee, and then they have another tax stamp that for filing as well. So you're going to pay the county, just over $2,000 based on a $325,000 house. Okay. This fees right here are a percentage. Also, this title fee is a percentage. So the higher dollar amount you go, the higher these 3 or 4 fees will be right here. However, the lower you go, so if you only buy a $225,000 house, your title insurance and your recording fees will be a little bit less. For government loans, we require termite inspections here in the South. So if you're in an area that is highly susceptible to termites, like we are here in the South, the government loans require that we get a termite inspection on the properties. Those cost anywhere from $40 to $50 to $100. We just put $75. Whatever the invoice comes in at is how much you will pay at closing. As well with the rest of these fees, I'm quoting you these fees based on, typically I estimate a little bit on the high side. So that way when we get to closing, we get all the invoices in and we justify and rectify all the numbers. They're usually a little bit lower than what I'm quoting you, but I'd rather be safe than sorry, wouldn't you? Okay, so that's everything that makes up the closing cost fee. So total closing cost on a VA loan for $325,000 is actually only $44,843. Isn't that cool? It's not really bad, is it? Now, here's where you get to the rest of the fees. We call these reserve or prepaid costs. So this is basically going to pay your interest from the day that we close through the end of the month, and it's going to cover your taxes and your insurance for the first year. So let's talk about that. Daily interest on this loan, $325,000 loan, 3% interest, it's going to cost you about $27 a day. I usually just say we're going to close the middle of the month, so there's 15 days left. So that's $409 worth of interest. If you close at the end of the month, you're not going to have any days of interest. If you close at the beginning of the month, you'll have 30 days of interest that will roll into your closing costs. The reason is, let's say you were to close a loan in March. Well, you won't make a payment in March. You'll skip April. You always skip the following month, and then your first payment will be due May the 1st. So if we close in March, you'll skip April, May 1st. Whatever month you close, skip the next month. First payment will be due the following month. The reason is when you make your first payment, your interest that you pay on your first payment actually covers the previous month. Interest is always paid in arrears. So every time you pay interest, you're paying for the previous month. Whenever you go to sell your house and we order a payoff and to tell how much is due, you'll see your balance plus interest from the date of your last payment. So interest is always paid after the fact. Just keep that in mind when you go to sell your house. Homeowner insurance, this deal that I quoted was a new construction. It was about $1,200 a year for homeowner insurance. Insurance usually, if it's a used house or a prior existing house, it's about $1,500 a year. Insurance is kind of a wild card. I'll see insurance policies go from anywhere from $1,000 to $2,000. If the house has had claims or if you've had claims in the past on your insurance, that fee could be higher or lower. This deal had a VA funding fee. It was 2.3%. Let's not worry about this because it doesn't apply to most loans. Unless if you're active duty military, this fee probably won't apply to you. Let me keep going. So what we're gonna do is these next fees. These are called reserves deposited with the lender. So if you were setting up an escrow account to where we pay your taxes and insurance for you, we're going to put about 2 to 3 months worth of homeowner insurance into an account. So in this case, $100 a month, so that's $300. And then we're going to collect about 8 months worth of taxes at $150 a month. It gives you $1,200. Let's talk about that real quick. You are only going to be responsible for taxes from the prorated taxes from the date that you close on that house until the end of that year. Taxes are due October 1st. So if we close in March, you'll be responsible for taxes for March, April, May, June, July, September, October. So that's 8 months there that you're responsible for the property taxes. The seller will give you a credit from the date taxes were last paid through the date that you close on the deal. Okay. So that's the reason you'll see 8 months worth of taxes there. It's based on the closing date all the way up through October 1st. And usually we'll do a month or two cushion in there for the taxes. You'll always see an aggregate adjustment and it's a negative number. So this says at any given time, we're going to have about $700. We're collecting about $700 too much and we're giving you that money back. Typically that's the seller's credit for taxes. Okay. Complicated, but you'll always see an aggregate adjustment giving you a little bit of money back stating that we're only charging you $2,400 for your prepaid items. That's your taxes and your insurance and the interest for the first month. Okay. So now that gets us to our, let's look at the details of transaction here. So the sales, what we have is a sales price of $2,500. We have your total closing cost of $48.43, which is this number that we went over on the first page. Then we're going to add in your total prepaids, which is this number that we just covered. And then if you have a funding fee, if you're doing an FHA loan or a VA loan, then we'll finance the funding fee. We're not going to worry about that one. Gives you your total cost. So sales price plus total closing cost gives you your total cost. Then we're going to subtract your loan amount. In this case, we were financing in the funding fee. Like I said, don't worry about that. And Franklin Synergy, if you open a new bank account with us, we give you up to a $500 credit if you open a bank account to help offset some of your closing costs. Pretty neat. You have to open a bank account with us and establish direct deposits, and we credit $500 back to you. So in this case, for a all said and done, for a $325,000 house, the closing costs were $67.52. Okay. Now that's the total. So you can ask the sellers to pay $67.52 towards closing costs, or you just plan on paying those out of pocket. So also over here, I have a breakdown of what I'm estimating your monthly payment. Principal and interest, $1,401, insurance, taxes, put a total estimated payment on this scenario at $1,651. So then we add, and that's it. That's kind of the basic rundown of closing costs. Whew, that was a lot. Hopefully it helps you to better understand the breakdown. If you have any questions anytime, it's completely normal to be confused or overwhelmed. There's a lot going on, but just know that I'm here to answer your questions. It's okay to be confused, but it's not okay to be concerned or have any red flags going up. So if you have any red flags, any confusion going on, pick up the phone and give me a call. We're going to walk through everything, and I want to make sure that you're comfortable and you understand what you're getting yourself into. That's very important for me. So any questions anytime, I'm here for you guys. Thanks.